What's going on, you guys? If you paid any attention to the news over the past several weeks, you've probably seen a bunch of news articles related to inflation. In fact, inflation is at a 30-year high. And this should scare the crap out of you.
This is sick. I'm out with you.
As you might recall, in 2020, when the pandemic hit, our economy retracted quite fiercely. And the government and the Fed threw the whole kitchen sink at our economy to try and keep it afloat and keep it from going into a deeper recession.
How much money printing can our economy handle?
But how do they do this? One of the key things that our government does is increase spending to stimulate the economy. Not only spending, but in 2020 we had these stimulus checks, and that money doesn't come out of thin air. It's not like the government has a stash of taxpayer dollars that are saved for a rainy day. Much of this money was newly printed.
They're simply typing a number into their computer, updating their spreadsheet, and like magic, a digital currency is borrowed by the Treasury Department. All that borrowing gives the Treasury Department the ability to issue those stimulus checks.
Now, of course, part of the reason that our government tells us that the stimulus checks were written was to help people that were in need during hard times, and I definitely agree with that. But part of that reason was also to help stimulate the economy by increasing spending, not just by our federal government, by putting money in the pockets of everyday Americans to go out and spend it. Now, the government had to borrow by selling its debt in the form of U.S. Treasury bonds and other types of securities. After the bonds are sold, the Federal Reserve literally prints new money. Now, this isn't always physical dollars printed anymore, right? It's more of a digital currency. Now, this is not a new measure. Literally, the Federal Reserve has been printing new money every single year ever since we came off the gold standard. This is part of the reason why the U.S. has racked up over $29 trillion in debt. And that's right, you heard that correctly, trillion with a T. What's crazy about the last 12 months at the time that this article was written earlier this year is that 40% of the US dollars in existence were printed in the previous 12 months. Let that sink in for a second. Literally 40% of the circulating money supply of US dollars in the world have been newly printed in the trailing 12 months. So what are the ramifications of printing money? Because at the end of the day, we could solve all sorts of problems if all it took was to print money and hand it out to people.
No problem. There is no problem.
Well, of course, when you increase the money supply, things become more expensive around you because it devalues the purchasing power of every single dollar that is in circulation of our economy, and this is known as inflation. The proper definition of inflation is the decline of purchasing power of a given currency, again, in this case, the US dollar, over a period of time. This means that there is a decline in purchasing power in regards to the average price level of goods and services in the economy. For example, you may notice over the past couple decades, the price of bread at the grocery store probably has slowly creeped up. Now, when inflation is at very small rates year over year, you really don't notice this uptick in price. However, in the past 12 months or so, when we're seeing inflation year over year at around 6 or 7%, you're going to start to see the impact of inflation in the price of everyday goods. Some of you are probably thinking, if everything around me is becoming more expensive, why am I saving so much money? After all, we're encouraged to save the money that we work so hard and earn at work. This really stresses the importance of investing most of your money beyond what you need for an emergency or rainy day fund to invest into assets that hedge against inflation. What I mean by hedge against inflation is hedging your wealth against inflation. So instead of having your money sit in a savings account, we move it into things like real estate, gold, and dare I say it, even cryptocurrency that, again, typically rise with inflation or in often cases outpace the level of inflation. And one of my favorite things to invest in, and it's allowed my wife and I become financially free, is real estate. And there's many different ways you can start investing in real estate. Some take a little bit less money, some take a lot of money, but there's a really big holdup that a lot of you are probably thinking out there is, well, hold up. What about the price of real estate? Because out of all the things around me, gas prices, like you said, bread at the grocery store, real estate has exploded over the past 2 years. And this is due to several factors which we're gonna touch on here, but inflation is of course one of them. The cost of materials to build the homes, of course, also goes up. In order to make a profit for home builders or house flippers, if the cost of your materials goes up, you have to sell the house at a higher price. The other thing to consider here is supply and demand. While there is a drastic uptick in demand for housing and new housing, the supply simply cannot keep up. This is why it's a little bit different, or a lot different per se, than it was back in 2008 and 2009. Since there is such a low supply in the housing market, but the demand is so incredibly high, this means that it's going to be more competitive for each available house on the market. And this has caused the housing price, the sale prices to increase, because if there's 10 to 20 offers instead of 1 to 2, people are going to start bidding higher and higher. It becomes a price war. And you, as the seller, of course, are more than likely to take the highest bid. Now, as more and more homes get sold, those homes are now used as comps for appraisals on other houses that are on the market and under contract. So typically homes are going to increase in the appraised value over time as well. Not only that, why is demand so high? It's not just the fact that everybody all of a sudden wants a house, but the Fed has lowered interest rates so much to stimulate borrowing. That's another action that the Fed and the government takes in order to stimulate borrowing and spending in our economy. So if people have the opportunity to lock in a low interest rate on a mortgage over 30 years or so, of course they're going to jump at the opportunity to lock that in a property. By locking in a lower interest rate, it means their monthly payment is less and they're paying less to the bank. So due to scarcity and demand, real estate will still appreciate at a faster than average rate through late 2021. According to CoreLogic, a data and analytics company, home prices nationwide, including distressed sales, increased year over year by 18.1% in August 2021 compared with August 2020, making the largest annual gain in home prices in the 45-year history of the CoreLogic Home Price Index. And on a month-to-month basis, home prices increased by 1.3% in August 2021 compared with July of 2021. And the nationwide median listing price for active listings in October of this year was $380,000, up 8.6% from the previous year and up 21.8% compared to 2019. The median national home price for active listings remained the same from September through October, and active listing prices in the nation's largest metros grew by an average of 5.2% compared to last year, slightly higher than last month's rate of 4.1%. So with all this being said, you don't want your savings to rot away and fall victim to inflation, but maybe you don't have enough money to go put 15, 20, or even 25% down on a rental property, right? A cash flowing rental property, meaning you rent it out to tenants or as a short-term rental on Airbnb. It pays for the mortgage and puts money in your pocket each month, and that asset grows in value over time and rides the wave of inflation. That's your appreciated value. The other thing to consider with real estate is sometimes it takes a lot of time and effort to go out and do analysis on different rental properties and figure out which one is going to be the highest cash on cash return and provide the best return on your overall investment. Not only that, you have to oftentimes find places that are distressed, pay money to fix them up, and then maybe do a refinance, rent them out to a tenant. So it can be a very lengthy process and soak up so much of your time. And many of you watching work 40 plus hours per week. So I'm going to introduce you to a company called Fundrise. And Fundrise is basically making real estate investment accessible for everybody. Put simply, Fundrise is the first investment platform to create a simple, low-cost way for anybody to access real estate's historically consistent, exceptional returns. One thing I personally really like about Fundrise is if you guys, again, don't want to take the time and put the effort or don't have enough money to go put money down on a particular investment property, but most of your money is pooled in either index funds or individual stocks. The real estate market does not always tend to go in lockstep with the stock market. So it's a great place to diversify some of your investments right there in the middle between investing in real estate on your own and the stock market. Fundrise is an online real estate company that lets average investors buy into private, commercial, and residential properties by pooling money together through their investment platform. Fundrise main products are real estate investment trusts, or REITs. You guys may have been familiar with that word before. So these generally invest in income producing real estate either through buying and managing buildings or by holding mortgages. The company calls its products e-REITs. Fundrise also offers e-funds in which investors' pooled money is used to buy land and develop housing and then sell it to home buyers. And lastly, its interval fund, which offers higher liquidity and diversification than its other funds. So here are my reasons why Fundrise is great and why I personally invest a portion of my investment portfolio into Fundrise. Number one, the cost barrier of entry. The minimum amount you need to invest in Fundrise is only $10. That's literally a trip to Starbucks. You can start investing into real estate. The second is the passivity. I guess that's how you say that word, right? It is 100% passive real estate investment. Once you select the funds that you guys want to invest in within Fundrise, they do all of the work for you. They go hunt down the properties, they invest the money, they manage the properties, they sell the properties, and they do this with full transparency. I can literally go on the app on my phone and see every single transaction that they are currently doing. I can see when they buy a new development, I can see when they sell a new development, and they're also very, very transparent about the historical returns for their investors. And you have the option to reinvest your dividends. So this is what I personally would recommend doing. If you were to ask me what my strategy is, this allows your money to be invested and compound over time. So as Fundrise, their properties are cash flowing, and as they reap capital gains when they sell properties, that money is given back to investors in the form of dividends. Now, I would like to mention that Fundrise is meant to be a long-term investment. It's not meant to be a highly liquid investment where you're moving money in and out of constantly. I do encourage people, whether it's real estate properties that you're investing in on your own time, or you're investing in real estate properties through a company like Fundrise, you should think of it as a long-term investment. And those that leave their money in over the long haul and continue to reinvest more are the ones who are likely to see the steadiest and strongest returns. So a couple questions I often get about Fundrise is my money liquid, or how liquid is it? Meaning, how quickly can I withdraw my money if I wanted to exit out of that investment? Investors may request to redeem shares at any time, although such redemption cannot be guaranteed, especially in times of economic uncertainty. And there may be costs associated with premature redemption. Which leads me to my next question that I get asked a lot is, what are the costs associated with investing in the platform? Investors pay a 0.15% annual investment advisory fee, which may be waived under certain circumstances. This means that over a 12-month period, you will pay a $1.50 advisory fee for every $1,000 that you've invested with Fundrise. Separately, the funds in their standard portfolios pay a 0.85% annual asset management fee. That's $8.50 per year for every $1,000 invested. You can find a full description of all the fees in their offering documents online. I also want to mention that who can actually invest in Fundrise if people are watching from out of the United States. Currently, Fundrise is only available to any U.S. citizen or permanent resident that currently resides in the U.S. and is over the age of 18. So I just wanted to mention that. Now, I do want to mention the app. I already mentioned it, how I can pull up Fundrise, I can check on the investments and how well it's performing. But I do want to bring this up again because a huge part of our lives is how we interact with technology and things that make our lives easier. And with Fundrise, I will be honest, this is one of the smoothest investing apps and platforms I've ever used, and I really enjoy using it. As a really clean user interface. Again, with the transparency on the investments, they actually have a news feed which you can scroll through and see the active acquisitions they're making. You can literally see the portfolio that your money is invested in and literally look at the properties on a map and the addresses and how big they are, whether they're single family homes, development projects, or multifamily apartment complexes, and see exactly what your money is invested in. Instead of kind of hiding that behind closed doors, I love the fact that they're transparent about it. If you'd like to learn more about Fundrise, I'll drop a link to them in the description below. Make sure you click that link, check them out, and see if it may be a good fit for your investment portfolio. Fundrise is one of my affiliate partners that I work closely with. I do personally invest in the platform on my own, but I just wanted to say that this video is not investment advice. I just wanted to share my experience using the platform and share with you guys a really cool tool if you're interested in investing in real estate in a 100% passive fashion. I really hope you found value in this video. If you did, please do me a favor, hit the like button, subscribe if you guys want to learn more about different real estate investing techniques and personal finance tips moving forward. I really appreciate it. If you have any questions at all, drop them in the comments below. I love hearing from you guys. Thanks again for watching. Hope to see you soon.